Hey guys, David Robinson here. Welcome to the Lead Sponsor Podcast. As usual, another great episode for you today. I'm excited to have Mike Desrosiers on the show with me. Mike's a little bit different guest than our typical lead sponsor guests in the sense of we'd like to have sponsors on the show, lead sponsors on the show, who are operating their own firms, out there sourcing their own deals, operating the deal after the fact, and they're bringing the whole deal together. Mike's business model is a little bit different in that he serves as a KP or a key principal in real estate syndication deals where maybe an up and coming sponsor who doesn't have the net worth, the liquidity, or the experience to take down a deal on their own might reach out to Mike, bring him into the deal, and allow him to lead the charge on a deal that wasn't necessarily sourced by Mike himself. And so we dive into his business model, some of his insights around how those type of deals are structured, how he's gone about partnering and finding partners on other opportunities, and how he's working with his investors to source equity. He gives some insight about how the market has changed investor appetite for these type of deals and what he sees on the horizon. And so really looking forward to sharing this interview with you with Mike Desrosiers. You can reach out to him at growcaptoday.com. That's growcaptoday.com. Mike has acquired 12 assets, about 1,000 units worth roughly $100 million in value. And so he's got some great experience on the capital raising side, structuring deals and being a key principal in these type of deals. And so I hope you enjoy our interview with Mike today. Mr. Mike Desrosiers, welcome to the show. I appreciate you coming on.
Hey, David, thank you so much. I appreciate the invite. Glad to be
Yeah.
here.
My pleasure. My pleasure. So, really excited about getting into your story and your background. I've already given the listeners a bit of an insight into sort of your business and what you're all about. But if you can, let's just back up. Let's talk about how you got into this multifamily syndication space and how your business is structured.
Sure, absolutely. So I've been involved in real estate for many years, as far as that's mostly just single family. I've always had rentals of one way or another. I live in California, so I've had, my, you know, real estate is done obviously very well in California, but it has been mostly on the single family space. I got involved in some of the education systems and went through, that kind of, one day seminar kind of thing, and which really I didn't even want to go. My wife dragged me into it, and but we went there, and they started talking about multifamily, and it really all made a lot of sense. And I'm not an easy sell when it comes to that kind of thing, but and it took me a little while to actually pursue further, but I did, and I started going through some of the courses, the weekend courses, and then the multiple, different courses that they teach, and it all made a lot of sense to me just because I've been there, and I've seen the value of real estate, and started just getting involved in the different networks, meeting a lot of different people within the industry, attending a lot of the different events, webinars, so and Zoom calls and things, and was able to meet up with some partners that I was able to come in and bring not only some capital to in the capital raising side, but I also have a lot of business experience. I've been in business for many years, multiple businesses, and I was able to bring some of that to some of these teams. They enjoyed that, and then kind of kept inviting me back into different deals. It allowed me to really scale up. My first deal, I raised some capital for. I put some of my own money in. But again, I helped with some of their systems and so forth. And then they quickly invited me to the next, and so on. And then I got into my own deal, and I ended up bringing them in. And now I partner with multiple different partners, groups that I'm able to help in the process of investor relations, capital raising, and I do participate in all the asset management and all the properties.
Yeah, love it. Well, thanks for that brief synopsis. So I want to go back to that first deal. How long ago was that first syndication deal that you were involved in?
The first syndication deal was just a little over 2 years. That's
Okay.
it.
Okay.
Yeah.
And when you got involved in that deal, like what was the criteria that you were looking for? What are you looking for in an opportunity? I believe you've been a part of deals in many different locations across the country. At this point, I believe 12 assets, around 1,000 units, and roughly $100 million in value. Um, Talk to us a little bit about the mindset going into it. I'm guessing that initially that you went into it just, hey, based upon relationship. It was built upon a relationship that you found through these seminars, through the these mentorship programs. But did it expand beyond that? And today, what are you looking for in your next deal?
Yeah, absolutely. Um, just being in business for so many years myself, I certainly have a lot of experience as far as you know, getting connecting with people and kind of quickly sizing things up, whether I feel it's a good fit or not. Certainly a lot goes emotional. Right now, you either feel it or you don't. This is definitely a relationship business. In my first deal, certainly that's what I was looking for. I was looking for some operators that I could relate to, that I could trust, that I could feel like is going to be a good fit for me and my morals and all that. I mean, for me, it's not all about the money. It's about the process. The money will come, I think, if you do a good job. I've been in the also in the advertising promotions business for quite some time. I had a business for over 30 years, and the way you do that is simply by running a very honest, sincere, and transparent business. And that's what I was really looking for. So at the very beginning, it's a bit of a it is a bit of a jump and into kind of the you're not sure if the pool has water in it or not, but you vet the deal as well as you possibly can. You vet the property as well as you can, and you're vetting the partners as well as you can. And hopefully that all works out. And so far it's done really well. I've got some great partners. I really do trust them. With pretty much anything. I like the way that they operate. I became very good friends with all of them. Yeah, so it's been a great ride for sure.
And so, would you say that you really are market and asset agnostic, or is there a particular type of deal that you're looking for? And if there is a particular type of deal, how would you describe that?
Well, the deal is simple. Like, am I going to make money for my investors? I mean, that's everything I do is investor centric, right? That's
Mm-hmm.
that's what I do as a capital raiser. I think that's the only way you can look at it, right? Like I'll get into deals, even if I don't think I'm going to really make money, but my investors will. I'm okay. I'm even okay with that. But I will not get into a deal where I'm going to make money and they won't. I mean, that's just not going to happen because my investors will reach out to me first, and no matter what, if things go good, if things go bad, I'm going to be the first one to hear about that. And I'm very
But
much.
from like a geographic standpoint, I
Oh,
understand that
sorry.
you're wanting to do deals, but like do good deals. I get that. What I'm
Yeah,
curious about is like from a geographic standpoint, from an asset type. Are you into commercial retail? Are you into
gotcha.
multifamily, mobile home parks, A class, B class, value add development? What do you do?
Gotcha. So my lane has mostly been the value add class B, C plus type properties. It's typically started in the Las Vegas market. That's where I got into my first property. That property actually I bought on my own to get into it, a smaller property. And I really thought that was going to be my area there. But then as I got drawn into some of these other partners, Texas became kind of a big market for me. And so I probably have 7 assets in Texas alone. Then there's also, Kansas City, Missouri is another group that I'm involved with as well too. But Texas has been the primary lane
Mm-hmm.
for many reasons. It's centrally located within the U.S. It's just has a very high migration. A lot of jobs, big companies. I'm here located closer to Silicon Valley. We've had some Silicon Valley companies like as big as Hewlett Packard that have moved to Texas, and of course all the Amazons and Teslas and so forth. And when you look at those numbers, when companies move of that size, they're not doing it for the short term, right? That's going to be a 20-year, 30-year, maybe 50-year run, right? And of course, the population and the high paying jobs will follow that. So that's always a really good indicator for me. But in the short answer of what you're asking, we look for population growth, job growth, an emerging market, a part of the state, whatever state that is, that where you are seeing that path of progress going on, and a good variety of job basis, right? A good mix, not just one industry, but multiple industries that will support the economy.
Yeah, love that. So let's maybe shift the conversation a little bit and talk about your expertise, which is in the capital raising side of things. You don't just dive into this business and start raising millions of dollars in equity for these type of deals. There takes some sort of background or effort. I'm curious about how you have been able to raise a significant amount of equity for these type of deals. What does that side of your business look like? Where does the investor base come from? Any strategies or tactics that you're implementing to grow your investor base?
Yeah, I think it's, I mean, I have gone out, certainly outside, starting with your kind of friends and families and contacts, but I've been in business for a long time in the advertising marketing business, and that company, which I still have, but it primarily works on autopilot, but it does focus on the high tech and the biotech industry. And so I deal with those kind of executives all the time, or I have for many years. And so I guess I have that, um, I don't know, I can connect really well with C-level executives of, any kind of industry. But on the capital raising side, it really just comes from being an investor myself. Everything I look at is something that, I look at as something I would invest in. And, I'm never really asking for money. I'm just simply offering opportunities. And I think when you look at it that way, it really takes a lot of pressure off as far as, you're really not selling anything. You're just simply, these are opportunities that I'm involved with and that I feel good about. And here's the reason why. And if someone wants to join in on that train and jump on my train with me, then I'm excited. And if they don't, that's no problem at all. And usually they will one day, right? But whether they get in early or late, it's up to them.
Yeah. And you mentioned that a big part of your business model is raising the equity. You've also been approached by some groups to um, sponsor a deal or to be a key principal on a deal. Maybe describe how that relationship works when someone comes to you with a deal and they want you to sponsor it. What's a typical process look like in that type of an arrangement?
Yeah, I mean, I do enjoy it. These come from some of the organizations that I'm involved with, right? That are students kind of coming through these systems, and they're very eager to, they're learning obviously on how to do this, and they're out learning to source deals, and out boots on the ground, and they get into deals and they need a sponsor, they need somebody to come in and KP with them, and they basically need a partner with experience is really what they need. I mean, it's somebody that brings the net worth as well as the equity. I mean, the
Liquidity.
experience, the resume, yeah, and but also it's not just somebody who signs on the note and then says goodbye, right? I mean, you're in it with them, you're a partner with them on that property for 3 to 5 years, typically is what our turn time is. And you're the one that's going to be kind of keeping up those bumper rails for them and making sure that it stays in the lane, and the property performs. And so my job coming in is, they're bringing these to me to do that. So I vet the deal just like it was my own deal. Honestly, it's not much different than a broker calling me with a deal. When a student calls me with a deal, I do the exact same thing, except they've kind of pre-underwritten the deal on for a syndication process or joint venture, however it's going to be. They've done some of the other preliminary, and it's not a broker coming up with the big pro forma. It's more of a student coming in that's analyzing the deal, and then from there I kind of help tighten that up, relook at the numbers, relook at the market, relook at the whole business plan, help with the story, or listen to the story and figure out the story is going to work for us. And then I'm able to kind of pick and choose which deals that I want to be part of. And again, it's based on which ones I feel I would invest in and that I feel would be a good deal for my investors.
And what does, just for our listeners who may be interested in partnering with someone like you, maybe maybe they're newer into the space, they are out there hustling, trying to find opportunities, building relationships with brokers, maybe even out there sourcing deals on their own, direct to owner, that type of thing. But they may not have the liquidity, the net worth, and the ability to take down the financing on their own, and they need someone like you in their world. What does a typical structure look like? And granted, I know that they can all be structured in 100 different ways, but typically, maybe just give us some guidance on what it's like to bring someone like you into a deal as a KP, and how that equity is structured, how the deal is structured.
Sure, absolutely. Well, it depends on who's bringing it and how much experience that they have and what they're putting into the deal. In many cases, if it's a student that's coming through the system, or I mean, a student that maybe does not have the liquidity and does not have, maybe the earnest money deposit or can't put up with all of that, doesn't have any experience in it at all. I mean, honestly, a KP will get 50% of the deal right off the bat. And that doesn't even really include the capital raising side of it. So, but students that are coming through this, they don't care. I mean, they just want to get in the first deal. They're happy as can be to do that, and the experience that they will get out of that, honestly, is worth way more than they would get, in being part of the deal anyway, or being having the entire deal. So, and sometimes that's bringing in other partners as well. Like I also source, if it's a big deal or maybe a deal that's like a little out of my market. I'm really strong in Texas. I have many properties in Texas, and anything that comes to me in the Texas market, it's kind of like turnkey, right? I have all the people, boots on the ground, property management, legal, all of that. But if somebody came to me with property, maybe it's not, it's in Colorado or it's in a different area or something that I really like, I might bring in another one of my partners that has more experience in that market, and we'll kind of split our share of that, and we just become a team. So it is a great experience for whoever's bringing the deal. They learn from some very experienced partners, and for us, we're able to scale up much more because I have a lot of deals that are brought to me.
Yeah.
But yeah, it's a long term, 3 to 5 years.
And have you been tempted or considered going deeper with your business model where you would actually go out, source your own deals, put your own deals together, raise your own equity, um, versus taking a little bit more of a passive approach on the sourcing side,
Mm-hmm.
um, and maybe solidifying a full fledged business model around it versus partnering one off with multiple different groups. Has that change in business model come to mind for you? Is it something that you see yourself pursuing, or are you content to be, a KP or a co-GP on other deals that are brought to you?
I do both. I mean, as I said, the first couple of deals, 3 deals or so that I had gotten into, I was brought into that deal. But then I also have another partner or two that I work with that we are looking to source deals
Mm,
ourselves. And we got into another deal in Texas, and we ended up bringing one of our partners in to help with that deal. Just at that time, they had more experience than we did, and we've already worked with them quite a bit. So it just kind of made sense to partner up with them. But to answer your question, it's a combination of. I think this model has worked really well for me. I mean, I've grown to over 1,200 units in right about 2 years. It's pretty fast, right?
yeah.
I mean, last year we closed on probably 6, 7 deals just in 1 year. And and of course, I have maybe a smaller portion of that, but I also know I don't want to do all this myself, right? So
Hmm.
I'm trying, especially my age, right? It's like the last thing I want to do is, start working the, 12-hour days, 15-hour days, right? I mean, I don't want to do that. And so I'm happy to share the workload with the right partners. And actually it's worked really well. I actually enjoy it because, and I enjoy sponsoring the deals from as a KP, because I also love I love these networking events and multifamily, right? It's just and I know I don't need to tell you that because you talk to people all the time, but we all just kind of have the same lenses on, right? And we just look at these things kind of the same way. I mean, just as far as the excitement of multifamily and the excitement of growing these, apartment buildings and acquiring and buying and selling and so forth. And so we all kind of have that same mentality, and it's awesome to be part of that type of network, and I really enjoy helping others learn how to do that, and that's what I get. It's another kind of enjoyment I get out of the sponsoring or KPing on deals with newer students.
Well, let's talk about what's going on in the market today. We're recording, end of September. Obviously, the world has been turned upside down from an economic standpoint and a debt market standpoint. What have you seen in your experience? Obviously you lean into the capital raising side. What's your sense of how your investors are reacting to the turbulence in the market, and how are you yourself reacting? And what do you see on the horizon with multifamily?
Sure. We're just being careful with the deals. I still think it's a great space to be in. I mean, look at the comparisons, right? Stock market, stocks, Bitcoin. I mean, everything is going down. If anything, is the steady Eddie and the safer bet to me. It's real estate, and it's the multifamily side of real estate, right? It's going to be less. It's going to be not affected as quickly. Our current properties, we are obviously seeing some interest rates go up where we have some flexibility in those rates. We have bought rate caps the entire time on any of the bridge loans or things. So we're fairly in a good safety zone, but it does eat up some of the profits when those, obviously the mortgage payments go up. And the communication with the investors is, we're still in a good position with this, and the money is still in a good asset. And in the long term, this is going to come out as a terrific return. I mean, that's what I feel. As far as what we're acquiring at this point, we are still buying, but we're very careful, being very selective, staying away from the bridge loans, unless we can get a rate cap that makes sense, and it has to have kind of a good reason for all of that. We're doing we're in a process in a property right now that is going into a bridge, but it's a bridge to HUD, and it's all through the same bank and organization. So we kind of have that all built in, and all the rates are all kind of baked right into the underwriting that's going to make sense. So I think that there's going to be some deals out there, and some terrific opportunities. So it's just about keeping your eye on that.
And have you had the opportunity to close on a deal, let's say in the last 4 months? Have you guys closed on anything or had a raise going on since the rates really started to fluctuate?
Yeah, we've had a couple of deals close, but yes, that did slow down. I mean, we closed on 96 units out of Waco, Texas, probably about 4 months ago. And actually it was a very quick raise. We filled very, very quickly because it's just a terrific property. It's right pretty much on the steps of Baylor University, and just a really nice property. Everybody seemed to really like that. But the people are being a little more reserved with their capital. It is being, they want to be, for good reason, and they should be, right? So again, you need to be careful of what you're getting into and making sure the financing is. We're seeing the financing obviously being an issue. Taxes and insurance are also going up quite a bit, especially in Texas. We've seen a lot of that where they've really adjusted their tax base, and that's increased. And then of course the overall just expenses on the property, everything is increasing from the supply, from the supply chain issues and, cost of goods to the labor. You're no longer going to pay the same, hourly rate to everybody, property managers, maintenance people, and any technicians to do what you could have got done for, even a year or two ago.
Yeah. So I want to start winding down here. I've got a few final questions for you. The first is, what's the biggest challenge that you're facing right now in your business that we could all learn from?
Biggest challenge, I would say just, right now it's underwriting. It's underwriting the new deals coming through. I'm seeing a lot of deal flow. I'm getting a lot of properties. Both I'm seeing it on the market from the brokers. I'm seeing it from, students finding these deals and everything because they're just more out there. I think a lot of people are, a lot of sellers that, would be sellers next year have put their properties up on the market early, just trying to, sell early before,
Get ahead of the curve a little bit.
get ahead of the curve. Yeah. So you're seeing all of that come up. And what would have made sense six months to a year ago doesn't really make sense so much today. So you just have to be very careful.
Yeah.
So it's filtering all of these deals coming through and trying to really underwrite them and head off the good and the bad and the ugly.
Yeah.
Right? Yeah.
Well, look, Mike, this has been a great conversation. I've enjoyed learning about your business and a little bit different approach. You're not our typical guest in the sense of, an investment firm principal that is leading the charge on sourcing deals and operating deals. But you play a critical role in this ecosystem of multifamily syndication. And you're a different model than normal, but a very effective model and a very lean model in the sense of you're able to really serve a purpose for newer or inexperienced operators who are out there hustling for opportunities and are able to get a deal at least to a point where they have control of it, but they need some support and help in the form of a KP, operational business background, getting the financing, etc., and being able to help a deal get across the finish line. And so I love that we have a couple different insights of how these deals can be structured. And I appreciate coming on, sharing some insight about your business, how it's structured, and what's the best way for our listeners to connect with you to learn more about what you have going on?
Absolutely. Thanks, David. Sure. Well, my website is growcaptoday.com. You can certainly go to that. There's contact information, calendar link, a lot of things there. But I'm also on LinkedIn, Facebook, Instagram, basically all of that, and I can certainly connect with that. I enjoy that. I enjoy talking with people. So anybody wants to connect and just schedule, an intro call, I'm happy to do that. I enjoy that. So.
Great.
Look
Well, we'll
forward.
have that link in the show notes. So if you've enjoyed our conversation with Mike today, just drop down into the show notes right now. Click on that link, growcaptoday.com. That's growcaptoday.com, and link up with Mike. And Mike, again, a privilege to have you on the show. Thank you for coming on and spending some time with us and giving us some insight into your business. And I look forward to connecting with you down the road.
Thank you, David. And hey, I appreciate what you do here on this podcast. Amazing, information that you're giving to people and opportunity to learn. I appreciate it. Thanks.